Hi, my name's Donald Boyd. I'm the head of growth here at Azets, and I'm delighted here to be in our studio in Leeds today. I'm joined by Ben Thompson, who is one of our experts when it comes to cash flow management and looking at the management information. So, Ben, welcome today.
Thank you very much.
So, you've been in the business for how long now?
So I've worked here for almost 9 years now.
Okay.
So working predominantly in our ABAS sector of the business with a range of different SMA businesses across various different sectors.
And you have seen a huge change, particularly in relation to technology and the way that we service clients over those years. Maybe just talk me through what you've seen over those the last decade or so.
Yeah, absolutely. I think when I first started, there was lots of paper documents, lots of Excel spreadsheets, and we've developed massively from there to a point now where we're using cloud software on almost all clients. We're using digital reporting, we're using cash flow forecasting, all sorts of things that have been driven by these cloud softwares to really pull out quick information that's live and accurate, which is having a massive impact on our clients.
Yeah, and so you mentioned cloud software. So for those that are not accountants, what does that actually mean? You know, it's not a big fluffy thing in the sky. You know, it's what exactly is that?
So cloud software is basically an accounting software that uses the internet to pull out live information. So it'll be using a bank feed, which is pulling information straight from your bank account. We can upload invoices digitally by taking pictures, which means that we can reconcile data basically on the spot, keeping everyone's data up to date and accurate, which helps people make management decisions.
And is it something that you can use on the go? You know, whether it's, you know, is that one of the main advantages?
Absolutely, yeah. There's apps for all these different softwares. Like I say, taking a picture is as simple as uploading an invoice to your software, which can then be reconciled within an hour of having the transaction.
Yeah, so a lot of our clients have obviously moved to the clouds. You know, we've got Making Tax Digital and everything coming up. Are they still with the kind of legacy, old-fashioned systems? I remember getting the massive backup and the memory stick getting dropped at the office. Is that still going on?
Yeah, thankfully that's much fewer and further between. There is the occasional big bag of receipts turning up, but much less so than there were sort of 5 years ago.
Yeah, so today we're talking about cash flow, obviously, and there was Method in the Madness talking about the cloud software because that's fundamental for a few of the things. So if we've got a client using cloud software at the moment, that's fine. We do the bookkeeping, the VAT returns. It helps us with the year end. But you were talking to me earlier about taking it to the next level, you know, and actually helping clients drive the business. So maybe bring that to light a little bit then.
Yeah, absolutely. So what we can do is we can take that sort of bookkeeping live information and then start to produce management accounts and cash flow reports on the back of that. So because the information's live and reconciled, we get a good understanding of how the business operates day to day. And using that, we can use various softwares internally and our staff's knowledge to pull together really accurate information that can look forwards as well as backwards. We can produce actual versus budget reports. We can look at cash flow forecasting and really unlocking various areas of the business that might not have been available previously. There's a number of areas within the forecasting software and the reporting software that enables us to kind of drive into the numbers a little bit more and start looking at, if we start tweaking certain metrics, what that looks like going forward and how that can help a business improve as well.
So it's kind of scenario analysis and
Absolutely,
things like that.
Yeah, we do
if I take on more staff, you know, and other things like that.
Absolutely, yeah. It's things like that, as well as sort of tweaking debtor days or something like that, and the impact that might have on a business as well.
Yeah. So I'm an accountant and I get a lot of this and I understand it, but for our clients out there that maybe don't get the kind of technicalities of that, have you got a recent case study, you know, that you can maybe tell us about the impact it's had on a client and maybe in their lives as well, you know?
Yeah, absolutely. One of my businesses, one of my clients that I looked after, he was making more profit than he's ever made in the past. So he just agreed a really big contract with a new customer. The only issue with that was they'd agreed 90-day payment terms.
Right, okay.
So he was sourcing his stock, producing all the work, completing the work, sending an invoice, and then wouldn't be paid for 90 days. And that was absolutely crippling his cash flow. So what we did is we pulled the information through our softwares and looked at how that was impacting his information. And what we did was we set a goal to bring that down and looked at how that would impact cash. So by bringing that down from 90 to 30 days, the impact was unbelievable.
Give me a number. What was that?
business.
What was the impact then on that?
We managed to unlock hundreds of thousands of pounds worth of
Hundreds of
cash.
thousands of pounds?
Yeah, I mean the contract was sort of £500,000, so we were able to unlock an awful lot of that.
Because that's something I've certainly found in my client base, where you've got a very successful business and they start taking off, but the term overtrading might come into play.
Yeah.
Maybe explain what overtrading is and you know how we can help clients that are maybe facing that.
Yeah, absolutely. I think clients can become too stretched if they grow quickly, which is obviously a great thing for a business. But if they do grow really quickly, they can find themselves getting too stretched and making potentially poor management decisions without having the information behind them. So what we can do as a trusted business advisor is come in and start looking into that information and offering our services to help them make decisions that help their business in the long run, thinking much further than just the numbers, but also supplier relations, customer relations, cash flow, compliance, all these different things that mean that we can keep them in line with all the regulations they need to be in line with, help them grow, but also make sure that they don't lose their way along that growth journey.
Yeah, yeah. And I mean, it's really what we're talking about here is the fundamental principles of accountancy and profit and cash. You know, I had an old boss years ago that said, you can't take your debtor's book along to Tesco and buy your shopping.
Yeah.
You know, so you know, and the cliche is cash is king.
Yeah.
You know, so really that's what you're talking about is that profit and cash.
Absolutely.
You know, differential there as
Absolutely.
well. So clients that are maybe struggling a little bit and they maybe need to really understand what's going on in their business. In the past, I've looked at a 13-week cash flow, but you were talking about 3 monthly cash flow is something you could do. Tell us a little bit about that.
Yeah, so what we normally suggest is we try and have sort of an annual review of the business. So what we'll try and do just prior to the end of the year is set a budget for the following year. So to look into the sort of metrics of the business, how it's performed, how it's expecting to perform next year, and start to plug that information into our reporting softwares. And from that, we can then drive a solid budget and then start looking at cash flow on the back of it as well. So we'll do that once a year. But then what we also want to do is do a 13-week or 3 monthly cash flow, which then looks more in depth in terms of how are my decisions today impacting me in this next sort of 90-day period. And I think that can be really important because there might be one-off events that you weren't anticipating or a tax bill that was higher than you thought it might be, and how you might be able to sort of negotiate your way around that with tweaks to debtor days or looking at pushing an investment decision backwards or something like that then just frees up cash to make sure you can meet the compliance deadlines you need to meet. Yeah,
because certainly, I mean, my experience when we've had maybe a client with pressure from the bank or something like that, that's the first thing they really look at.
Yeah.
You know, 'cause there's an old saying that a 3-month cash flow has got a semblance of non-fiction, whereas anything beyond that might be a bit, it's a bit more a forecast at the end of the day. And the only thing right about a forecast is that it's wrong, ultimately. So how do you deal with that challenge when we're looking at a longer term forecast and the assumptions on that?
Yeah, it's difficult. It is difficult just because of the way of the world. This is obviously a cost of business crisis review that we're doing. So there are so many changes that people don't anticipate through the year that it's really difficult to do. But I think what we can do now is by looking at data over a period of years, we can look at what our assumptions and expectations might be. So that if a client is predicting double the sales, if there's no sort of concrete backing behind that, it's challenging that and using our knowledge from our experience in the business to kind of be like, are you sure that's actually going to happen? Because if we forecast that and it doesn't happen, what's the business impact going to be? So having sort of, sometimes they can be difficult conversations too, but to have a realistic approach to what it's going to look like for the next 12 months is really important.
Yeah, and especially with the recent budget and the NIC, so certainly clients with many employees really need to know the impact on their business. That's something that you would be looking to model.
Absolutely, yeah. So what we'll do is we'll just tweak last year's model for these updated amounts. So to look at exactly what that impact might be on them going forward, to give a good sort of actual versus budget position of where we thought we might have been 12 months ago.
Yeah, and is there any sectors that this is particularly valid for, or is it all sectors really? You know, bring it to life, the kind of sectors that you're dealing with.
Yeah, I mean, I've got clients across a range of sectors, and I feel it can work for almost all of them. So you might have an investment company that's looking for its next investment, and it might need to delay or speed something up depending on how much cash they've got in the business and what they might be expecting. You might have a bar and restaurant business, and they're commonly under a lot of pressure at the moment with the sort of narrow margins that they make, and looking at how can they staff their business to make sure that they're as efficient as possible. So it can be a real range across multiple clients. Another client I've got buys a lot of his stock about 6 months in advance. So looking at when he's making those decisions and then trying to compare that with VAT deadlines that might be coming around and the liability that's due there, and all those different things that might not come across straight away when you're thinking about it, but looking further afield at when they might impact the business.
Yeah, and cash-rich businesses as well, is it applicable to them as well? Because, a lot of smaller businesses, frankly, will run the business on the bank statement, and if I've got money in the bank, all good. Is the forecasting applicable to them too?
Absolutely, yeah. I think within our softwares, we've got something in there called a goal seek tool. So we're able to kind of unlock what that goal might be. So a client might wish to double the amount of cash they've made last year, even if they've made a load last year, and what we can do to do that. So if it's reducing debtor days or increasing a sales price or something along those lines, to then start modelling how that's going to look. Right,
that's great. Well, listen, Ben, that's been phenomenal today. I've been really interested in particularly the cloud side of things, because I'm a bit of an OG guy. You can tell with the grey hairs here in terms of the way cloud accounting is then moving towards the predictability and the forecasting, which ultimately is what Azets look to do for our clients, which is improve their lives and and their businesses, and help them frankly make more money and sleep at night. So Ben, if you've done the cash flow forecast for a client, sometimes there's bad news to deliver as well. If there's a problem on the horizon, how do you address that?
Yeah, so it's the nature of the beast really with cash flow. I think what we'll try and do is straight away raise the issue with the client. So look into the areas where there might be the problems and see if we can find what that problem might be it debtor days that are out of line, be it things like inflationary pressures that might not have been considered, and then go to the client with some regular check-ins to sort of check in terms of how they're doing with that issue. Have they made necessarily amendments to their business to try and counteract what those issues might be? I think it's really important to have that two-way conversation to make sure that we can work together to offer that solution, but obviously let them do exactly what they do best.
Yeah, so it's not, don't stick your head in the sand. It's really face your issues and deal with them. Absolutely. And if you've done a cash flow model, worked with your trusted business advisor as opposed to run your business in a bank statement, which unfortunately a lot of people still do, then you stand yourself in good stead to deal with those issues.
Absolutely, yeah.
Okay. For your kind of clients out there just now that are not forecasting their cash at the moment, what one last bit of advice just before we wrap up today would you give those clients, as to what they should do?
I think my advice would be to certainly get in touch with your trusted business advisor to see if we can help you unlock other areas of your business that you've not yet thought about, but to also do a deep dive of your business every 3, 6, 9, 12 months to have a look into any areas that you might not have thought of. So have you looked at inflationary pressures or new government guidelines or anything that might have changed in the marketplace you were in last year compared to this year? Yeah.
So guys, remember, profit is very much vanity and cash is our sanity at the end of the day. So thanks very much to Ben today. It's been fascinating for me. And remember, guys, get in touch with your local trusted business advisor here at Azets. We're here to help.